Hedera HBAR price prediction, what everyone is missing. HBAR once reached a price of 57 cents, but it's now around 7 cents, down almost 88% from its historical peak. Looking at this figure, it's not hard to see why many investors have lost faith in Hedera. But the interesting thing is that while the price of HBAR is still struggling, Hedera is quietly building an ecosystem focused on enterprises, large organizations, and real-world blockchain applications. So is HBAR being underestimated? Let's dive into it with Crypto Radar in today's video. Crypto Radar. While most investors are focused on HBAR's price action and the latest HBAR news today, another story has been quietly unfolding in the background. Beyond HBAR technical analysis, it's equally important to understand the fundamental developments shaping the network over the long term. It's the story of how Hedera HBAR Crypto has been expanding its presence through strategic partnerships, real-world use cases, and growing interest from major institutions. One of the clearest examples came earlier this year when Hedera was announced as a partner of America 250, the nonpartisan organization established by the U.S. Congress to coordinate the nation's 250th anniversary celebration of the signing of the Declaration of Independence. The collaboration reflects Hedera's commitment to advancing American innovation and supporting a once-in-a-generation celebration that brings the nation together. If we looked at this event in isolation, many people might dismiss it as nothing more than a publicity partnership. But what caught my attention is that America 250 is far from a typical commercial initiative. It is a nationwide program designed to engage hundreds of millions of Americans across all 50 states. That also suggests Hedera Crypto is steadily building credibility in areas that matter most to enterprises and major institutions. An important factor to consider in any long-term Hedera price prediction. But America 250 is only one piece of the bigger picture. Looking back over the past few years, Hedera has repeatedly been involved in public sector initiatives across the United States. In 2023, the U.S. Department of State's report, Private Sector Commitments to Advance Democracy, highlighted Hedera for organizing discussions on how blockchain technologies support human rights, transparency, and sustainability. Then, in 2025, the Hedera network was selected as the infrastructure for Wyoming's Frontier Stable Token, FRNT, the first stablecoin issued by a U.S. state. Developments like these often receive less attention than price charts, yet they can be just as important when evaluating a Hedera coin price prediction. Another aspect that often receives little attention is the project's development team. Nilmini Rubin, Hedera's chief policy officer, previously held several senior positions at the U.S. Department of the Treasury and the U.S. Senate Committee on Foreign Relations and has worked closely with the Federal Reserve Bank of New York. She has also testified before the U.S. Congress multiple times on issues related to blockchain and digital assets. This does not give Hedera any special advantage, but it does demonstrate the project's deep understanding of the regulatory landscape and how to work with government agencies, an increasingly important factor as blockchain technology moves into real-world adoption. If you're interested in learning more about real-world assets and the blockchain projects supporting their adoption, don't miss Crypto Radar's Ethereum analysis for another interesting perspective. Of course, none of this proves that HBAR Coin will become the dominant blockchain or that its price is guaranteed to surge in the future. However, it does highlight the direction Hedera has consistently pursued for years, earning the trust of enterprises and institutions instead of chasing short-term market attention. So, what are the key factors that have enabled Hedera to build that level of trust with businesses and major organizations? Today's crypto market includes hundreds of blockchains, from Bitcoin and Ethereum to Solana, Sui, and Aptos. So, what makes many large enterprises and institutions continue to choose Hedera Hashgraph and HBAR? In my view, the answer lies in the fact that Hedera was never really built to become a blockchain driven by short-term speculative waves. From the very beginning, the project positioned itself as infrastructure for enterprises, institutions, and large-scale applications. That is also why Hedera's development approach is quite different from most blockchains we commonly see in the market. To date, Hedera has processed more than 71 billion transactions on its mainnet, and the majority of those transactions have not come from asset trading or speculation, but from real-world applications already in operation. This is very different from many other blockchains, where transaction volume often rises sharply during bullish market periods and falls significantly when speculative capital leaves the market. This is one of the key reasons why HBAR token analysis should focus on network adoption rather than price action alone. In addition, Hedera is designed to handle thousands of transactions per second, with transaction fees remaining nearly fixed at around $0.0001. This may not seem particularly important to retail investors, but it is extremely important for large enterprises. Imagine a logistics company tracking millions of shipments every day on a blockchain. If recording data costs $1,000 today, but rises to $10,000 tomorrow because of network congestion, it becomes almost impossible for the business to make reliable long-term financial plans. However, low cost is only part of the story. In my opinion, Hedera's bigger differentiator lies in its governance model. Rather than allowing the network to be controlled by a development team or an anonymous community, Hedera established the Governing Council, a governing body made up of up to 39 global organizations. This council includes well-known names such as Google, IBM, Dell Technologies, LG, Hitachi, Standard Bank, and Deutsche Telekom. These members directly participate in voting on software updates, development direction, and important changes to the network. This model helps distribute governance power among multiple independent organizations rather than concentrating decision-making authority in a single entity. These are also some of the fundamental factors investors often overlook when making an HBAR price prediction today. This does not mean that Hedera is superior to every other blockchain because each network has its own development path. However, for organizations making significant investments in digital infrastructure, they need not only strong technology but also a transparent, clear, and trustworthy governance system. This is also why many enterprises view Hedera as an infrastructure platform rather than simply as a crypto project. In addition, Hedera follows a compliance-first approach, meaning it prioritizes the ability to meet legal requirements and enterprise standards from the very beginning of network design. As blockchain technology is increasingly applied in areas such as supply chain management, digital identity, asset tokenization, and carbon credits, compliance is becoming more and more important. Enterprises need not only a fast and low-cost blockchain, but also infrastructure that can operate within legal frameworks and meet the standards they are required to follow. That may be why, in recent years, we have continuously seen Hedera appear in projects related to supply chain management, data management, digital identity, and asset tokenization. If you regularly follow Hedera news, you will notice that many of these partnerships are centered on enterprise adoption rather than short-term market hype. These sectors may not create the same level of FOMO as meme coins or DeFi, but from a long-term perspective, they represent very large markets with the potential to generate sustainable demand for blockchain usage. And those are some of the key reasons why Hedera has attracted the attention of large institutions, and also what many people are missing when looking at HBAR Hedera Hashgraph. The market may not immediately reflect the value that Hedera is building, but factors such as technology, governance, and real-world utility could become important foundations in the long run. So over the long term, how might these factors affect HBAR's price potential? After looking at all the pieces we've discussed, the question most investors are probably asking is, will all of this eventually be reflected in HBAR's price? That's exactly what makes any Hedera HBAR price prediction so challenging, as both market sentiment and long-term fundamentals need to be considered. This isn't an easy question to answer, and any HBAR analysis needs to consider both short-term market sentiment and the network's long-term fundamentals. If you only look at the price chart, HBAR may disappoint many investors because it hasn't delivered the explosive growth seen in some other Layer 1 projects. However, if you take a closer look at Hedera Hashgraph HBAR and how the network has been developing, you'll notice that the price of HBAR and the intrinsic value of the Hedera network have been following two very different trajectories. Throughout most of the previous market cycle, the crypto market was primarily driven by speculative capital. Even crypto news today is often dominated by short-term price action and market sentiment rather than the long-term fundamentals behind individual projects. Projects with large communities, strong narratives, or trending stories were often able to attract capital very quickly. Hedera, however, chose a different path. As I explained earlier, instead of focusing on DeFi or short-term FOMO-driven trends, Hedera has spent years building infrastructure for enterprises, institutions, and real-world blockchain applications. That difference also creates a rather interesting paradox. The network processes an enormous number of transactions, but most of those transactions are used for data verification, system operations, or asset tokenization rather than generating buying pressure for the token through digital asset trading. In other words, heavy network usage doesn't necessarily mean HBAR's price will rise immediately. That's one reason why HBAR today may not fully reflect the network's long-term progress or real-world adoption. However, from a long-term perspective, this isn't necessarily a negative. The HBAR price can fluctuate with market sentiment throughout each market cycle, but the value of a network is typically built over many years through user adoption, ecosystem growth, and real-world utility. That's why many breakthrough technologies take years before the market fully recognizes their value. In my opinion, HBAR's long-term outlook will depend on three key factors. The first is ecosystem expansion. If more enterprises and institutions continue launching applications on Hedera, demand for the network will naturally increase. The key metric isn't the number of partnership announcements, but how many projects actually go live and generate sustainable activity. The second factor is institutional capital. Over the past few years, financial institutions have become increasingly interested in blockchains that offer real-world utility while meeting regulatory requirements. If this trend continues, enterprise-focused networks like Hedera could be well positioned to attract long-term institutional investment. The final factor is the broader direction of the blockchain industry. Asset tokenization, AI, the machine economy, and digital identity are all expected to become major markets over the next decade. As these sectors continue to grow, demand for blockchains that offer high throughput, low transaction costs, and reliable performance is likely to increase as well. These are all areas where Hedera has been investing and building for many years. Of course, none of these factors guarantee that HBAR will ultimately emerge as a winner. The project still faces competition from many major blockchains, and superior technology alone doesn't guarantee that the market will immediately reflect its value in the token price. Ultimately, HBAR's price will continue to be influenced by market cycles, capital flows, and investor sentiment. That's why, instead of trying to predict a precise price target, I believe it's more reasonable to look at several possible scenarios. Like any altcoin price prediction, the outcome ultimately depends on adoption, liquidity, and overall market conditions. In a conservative scenario, if Hedera continues growing at its current pace, while overall market liquidity remains relatively unchanged, HBAR will likely appreciate alongside the broader crypto market, but may struggle to significantly outperform many other projects. In a more optimistic scenario, if the ecosystem continues expanding, more enterprises deploy real-world applications, institutional capital increases, and the market begins rewarding blockchains with genuine utility rather than purely speculative narratives, then HBAR could have a much greater chance of being revalued. Under those conditions, a return to around 30 cents the 2025 high, or even revisiting its 2021 all-time high near 57 cents becomes a realistic possibility. These are not guaranteed price targets, but rather historical price levels that HBAR could revisit if its underlying fundamentals continue improving. Looking even further ahead, if Hedera truly becomes one of the blockchain infrastructures widely adopted by enterprises and major institutions over the coming years, HBAR could eventually move beyond its previous all-time high. However, this remains a long-term scenario and will ultimately depend on whether the project can continue converting its technological advantages, ecosystem growth, and strategic partnerships into meaningful real-world adoption. Perhaps that's the most important point I want to emphasize in today's video. What many people are missing isn't a single news headline or isolated event. It's the fact that Hedera has been quietly building its foundation for years, even while HBAR's price has yet to fully reflect those efforts. So instead of simply asking, how many times can HBAR go up? Perhaps the more meaningful question is Hedera building value that the market still hasn't fully recognized? If the answer is yes, then over time, HBAR's price may have a much better chance of reflecting the value the network is quietly creating today. Alright, that's everything Crypto Radar wanted to share today regarding the long-term price outlook for Hedera. If you'd like to discuss Hedera further or share your own perspective on the project, feel free to leave a comment below. And as always, please remember that the content shared in this video is based on my own research and personal opinions and should not be considered financial or investment advice. Always do your own research before making any investment decisions and invest responsibly. Crypto Radar disclaims all responsibility related to the results of your transactions and your assets. If you found this video helpful, don't forget to hit the like button and subscribe to support the channel. Thank you so much for watching, and I'll see you in the next video here on Crypto Radar.